So it's quite a strong open as far as the Asian markets go.
Up 3.7%. That is hotter than expected, hotter than the rearview mirror.
Global debt burden retreated for a second year in a row.
Yesterday's low of 45,299 should not break on the way down.
Bombay Dyeing is going to monetize their Worli land parcel for 5,200 crores.
The first tick on the Nifty is at a record high opening, 20,124.
There are pockets of the market in the small cap, mid cap space that are extremely overvalued.
We believe in the sector. We believe it's got very strong fundamentals for several years to come.
It's after almost 13 years that the JSW Group is coming back to the IPO market.
The Nifty Bank, it's been a bit choppy, but right now it's just up close to about 70, 72 odd points.
Zaggle is an antidote to haggle, and if you know, in India, every Indian wants to haggle.
But it's come in at around 0.5% in terms of a decline or a deflation as compared to over 1% in the previous months.
I am not against any diesel or any diesel car.
The Midcap Index is up nearly 1%. The Small Cap Index has a rally of more than that.
Okay, not very much has changed actually for most of the day. The Nifty is flat while broader markets are jumping up. That's the story. You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Rima and Surabhi. Guys, hi. Good afternoon. So, again, it's flattish. I mean, not very much at all. New to report in that sense.
But flat on the index, but...
Exactly. Prashant, I thought we'll not say it for a while, but within 2 days, we've gone back to saying mid-caps are outperforming.
No, I mean, we went back to saying that yesterday, right? And I think
actually, yeah.
But it's still not back to the level it was before the Tuesday's fall, yeah. Maybe tomorrow.
Okay, well, you got what, 8 points on the Nifty, 20,076 on the rate. You got Bank Nifty, which I think is doing a little bit better, and that has been true for the last 2 or 3 days. Actually, not quite so much. Absolutely flat. 40-point change on a 46,000 index is nothing. But yeah, mid caps and small caps are still up and about 1.25% there. So since Rima mentioned we're not back to the highs, the high before the fall, actually the high on that day when we had that day before yesterday, we had the big fall, was 13,080. And we are about, how much? 400 points away on the small cap index. And the mid cap index, similar kind of levels, is the high was 41,690. And we are about 40,650 or so. So not very far away, but yeah, I mean, there is some more distance to cover in that sense. Rima.
Hi, but at the index level, we're just consolidating, right? Slipped a bit from the day's high, but the mid-cap, small-cap recovery is quite stark. The index which takes your breath away is the PSU Banking Index. It's up 0.6% today. This week, it's rallied 5.5%. To run you through some of the movers and shakers at the index level, Asian Paints is the top loser, down 1.3%. One, crude prices have been on the rise. But secondly, there is that impact of Grasim's entry into the paint segment. It could be a challenger to the incumbent player. And Kumar Mangalam Birla has said he wants to be the number 2 player in the paints industries. So Asian Paints has gotten shaken up a bit. Other heavyweights like ITC, ICICI Bank are dragging their feet. On the way up, you've got UPL, which is the top Nifty gainer, a 4% rally. Antique today upgraded the stock and kept the target price at 780. They're saying that the whole market has rallied in the last 6 months from March, but UPL as a stock is down 18% from March, of course, because of concerns surrounding the industry, but it's underperformed to a fair extent, which is why they believe the time is right to upgrade it. Metals are doing well. Hindalco, NMDC, SAIL across the board, and you've got a couple of auto names like M&M, Eicher Motors gaining 1.5 to 2%.
Okay, so that's the story on the large cap screen. On the mid cap screen, let's start by looking at Bombay Dyeing. It really has to be the stock of the day with this huge amount of cash they've managed to pick up with the monetization of their land parcels here in central Mumbai. The stock has cooled off from the morning highs. I mean, it was up in the mid-teens. Now it's up about 10%. The other one is Bombay Burma. It's also retaining a 5% up move for now from the same group, the Bhatia group. So those are the two newsmakers of the day. And so is Lloyd Steel. Lloyd Steel up about 5% as well on some of the newer contracts that they are getting. So those are the newsmakers. But beyond that, did anybody, say the PSU rally is done? Well, you might want to check your screen again now. NHPC 8%, NMDC 5%. Then you have the banks like Central Bank of India up 6-7%, NBCC 8-8.5%. It's such a long list of PSU stocks with gains which are not small after the huge rally that we've already seen. Big moves, and it doesn't matter. It's cutting across sectoral lines from power to banks to something like construction, which is NBCC. So that's one theme that's really standing out. And the other is sugar. With this whole talk of sugar deficit and perhaps, a lot of emphasis now on the biofuels program as well, on ethanol blending, etc. Maybe that's also adding to the sentiment. So the likes of Triveni Engineering, Balrampur Chini, EID Parry in a real sweet spot, really. Dwarikesh 9%. So sugar is definitely looking good. Enough themes, I think, to keep people excited in the mid-cap market today.
Absolutely, no doubt. And the PSU, right? I mean, look at the Nifty PSU Bank PSU Index, PSU Bank Index, and then there's the Nifty PSE Index as well. Public sector enterprises, both are up 1.25% each. So yeah, there's that space continues to do very well. How should you position yourself in the last hour? That's the question. So let's bring in Mitesh with the answers to that. Mitesh, hi, good afternoon. So I guess we jump to stock straight because the Nifty. Not very much at all. Absolutely flat.
Prashant, I think not much happening on the index. And, the key here could be the Bank Nifty. We talked about this level of 46,200. And maybe, that was the closing high. 46,186 was the closing high on daily basis on the 20th of July. And there's some intraday, hourly and 2-hourly highs pivot at about 46,200, 220. So I think till this level is crossed, I think you might see the Bank Nifty kind of, be tentative, and we got a high of 46,154 today. So I think, there could be mild consolidation for a few hours, maybe a day, couple of days in the indices. Or I think the alternative is that the IT index picks up and, gives some kind of fillip to the Nifty. But till that happens, I think, stock specific may not be a bad idea. I have a buy on Apollo Hospital, which after a pullback is getting momentum again. So buy here with a stop at 50.40. Look for targets of around 51.50. And Balkrishna Industries, I think that's interesting as well. That's breaking out with good volume. So that's a buy with a stop at 24.65 for targets of 25.70.
Okay, all right, Mitesh. Thanks very much for that. I mean, actually, you may want to stay on, Mitesh, because some of these sugar stocks, right, we'll ask you chartically how they're looking. Stocks are, jumping. This is on the back of ethanol blending and, of course, price revisions, which are expected. Structurally, are things turning now for the sector in a positive way? That's the question. Surabhi Sutaria is now standing by on the big wall with details. Surabhi, over to you.
Sugar season has seen a transformation in the last 5 years, with more and more sugar being diverted for ethanol production. Now, currently, there are two things working in the favor of the earnings growth of these sugar companies. First, the domestic sugar prices, which are at 37 rupees per kg. Now, with the prevailing El Nino conditions, the sugar production is under pressure, and the sugar inventories are also at 5 million tons, which is the minimal requirement for the peak festive season. Now, because of the favorable demand-supply scenario, prices are expected to remain firm at 37 rupees per kg. Another factor which is aiding the earnings growth has been higher ethanol blending. Now, government has reiterated that India wants to achieve ethanol blending target of 20% by FY26. Currently, ethanol from sugar diversion can suffice 7 to 8 billion litres, and we will need at least 11 billion litres to reach the 20% target. This means that the company will have to do some more capex on the distillery front. Currently, when you look at some of the listed companies, at peak utilization levels, the companies will have capacity of anywhere between 11 to 35 crore litres, with Balrampur Chini being the biggest one with 35 crore litres. They will also contribute 30 to 45% of their revenues by FY25 from the distillery segment, which will aid the valuation. Now, when you look at the valuation of these companies currently, they are all trading under 10 times EV EBITDA with a return on capital employed in the range of 15 to 23%. There are some other things we'll also have to watch out as the next sugar season starts. One, any information on the SAP price hike. Industry is working with a number of rupees 15 per quintal. Anything higher than that could be negative for the UP mills. We'll also have to watch out for how much they carve out for the exports the next sugar season And also, industry is awaiting the ethanol pricing for the next sugar season.
Okay, lots of triggers lined up there. Surbhi, thank you very much for highlighting them. Dilip Bhatt is here with us on the show. Dilip, sugar is a very cyclical sector. The tide seems to be turning for the better. It's getting sweeter. Today we had DAM Capital put out a note, and they're seeing a lot of upside in many of these stocks. Do you like the sugar names and any one in particular?
Well, I think as far as sugar industry is concerned, certainly there is a structural shift for the better of the industry. I think there's a good fair amount of tailwind by way of increased ethanol blending. And of course, the international production also is one of the issues, and the prices are going northwards. Having said that, we should not forget that we are running into an election year. There are elections in the states, there are elections in the center. So looking at that as a possible headwind and a major headwind, I'm not too sure whether sugar industry as such will have a free pathway for them to do what they want. So that being the case, I think I will be pretty cautious and apprehensive on the sugar industry. Maybe there could be some momentum run here and there on the upside. But I don't think that one should ignore this, because sugar certainly is a cause for worry for anybody, especially in terms of the inflation. So I would be a little careful on the sugar industry, though structurally it is getting much better than what it used to be in a cyclical way.
Okay, well, that is sugar. In terms of the fundamentals, Mitesh, in case you're with us, actually, as Prashant said, even I was quite curious that the kind of moves these sugar stocks are making, the momentum is with them right now. So are the headlines. But just purely in terms of levels, charts, do you see any interesting breakouts, any trades in sugar?
Not any, I would say many.
Okay.
Disclaimer here that I have positions in Balrampur Chini future segment, and we have also recommended Balrampur Chini and the other one. Just I'm forgetting the name, but EID Parry to our clients as well. So there's really vested interest. But yes, I think on charts, I think if you look at these stocks, most of them are giving breakouts on weekly and daily chart, which means that the trend will last for a couple of weeks to few months at least. And I would look at about 15-20% across the board. So, for example, Balrampur Chini, which opened with a gap up today, I think that the gap level of around 418, 419, 420 will not break, and therefore it will be a buy in case you get more dips from here. But if somebody is holding out, or somebody even wants to buy now with a positional stop loss, I think below 418 would be the stop loss, and I would look at targets in excess of 480 to about 500 here. Similarly, EID Parry is something which is where we think some kind of medium-term trade has started, and I would look at targets of around 592 to begin with, but good chance that we are looking at 630 being revisited. And the third one on my list, I think is Dalmia Sugars. I think that's the other one which I've been liking a lot as a price chart, and that's a stock which I'm looking at testing levels of 540, which is the highest ever weekly closing the stock has done. So very positive on most of the sugar stocks.
Okay, wow, there we have it. Both fundamental and technical consensus on the moves that we're seeing in the sugar space. With that, let's move on to some of the other names as well. We've, of course, got Dilip with us. Dilip, PSU stocks. The market has made up its mind, and I mean, if you go by the price action, it's very clear. Nobody wants to sell them in a hurry, and there are enough buyers coming in on the dips. But I guess you have to be choosy now. So do you have any suggestions in mind, the 1, 2, 3 PSUs that you would look at? Aside of PSU banks, that's a separate question. But any other PSUs that you think you would still want to buy after this rally?
Well, I think the way the PSUs have really moved up, I think it's very remarkable, and they are sustained without any doubt. And I think we have seen a good amount of buying also that has taken place. And I think typically we have seen that whenever the market really goes up significantly in terms of the indices, we certainly try to see a relative valuation, and that is where I think the PSUs still stand out in terms of their valuation. But I think having said that, I would say that one should definitely look at the historical valuations. and why they have been trading at such valuations. So I think that being the case, it's very difficult to make out a case for the PSUs from the current levels. I would say that if I'm having it, I will hold on to it, but I will certainly not buy into any of the fresh ones, because just spilling it over a little even to the PSU banks, I think same is the case. On a relative basis, some of the PSU banks which are doing very well, they had been lying dormant or not been so very active in the up move. So they have started participating. And typically this relative catching up game always happens in a good bull market, which is what we are witnessing. As the other stocks become more expensive, some of these look very attractive. And I think that is what is really playing out. So I would say that yes, there could be a momentum in the short run, but whether one should buy it for the portfolio, I'm not too sure.
Okay, Dilip, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC TV18. It's a pleasure, as always. Well, we'll take a very quick commercial break. The market actually is absolutely flat. 5 or 6 points is what we have. We have Abneesh Roy of Novama Institutional Equities joining in on the other side. I'll talk paints with him. So we've got some more details, at least the name, the branding for Grasim's foray into the paints business. So we'll talk about that. And after that, Rupesh Patel of Nippon India Mutual Fund will join in for the Alpha Manager segment. Stay with us.
Welcome back. Well, let's put the spotlight on the paints business for the time being, because there are lots of interesting developments happening here. The Aditya Birla Group will launch its paints business under the Birla Opus brand in the fourth quarter of this year. Group Chairman Kumar Mangalam Birla says he expects to build on the Aditya Birla brand to become the number 2 player in the country. Do note the company had committed an investment of 10,000 crore rupees towards setting up this business. To talk about this and, of course, what lies ahead for the incumbents, we have Abanish Roy joining in. He's, of course, Executive Director at Nuvama Institutional Equities. Abanish, good afternoon. Good to have you on. I don't know, what is it about the paints business? Because it seems, all the big business groups, almost all of them, want to jump right in, from the Jindals to now, we have, of course, aggressive moves coming in from this group as well, Aditya Birla. What do you make of the Birla Group's plans and in terms of just complete disruption? What are we in for over the next couple of months?
Yeah, thanks. Yes, definitely interesting development. Birla Opus brand is exactly in line with our expectation. The expected use of Birla and the use of the word Opus again shows that Grasim is looking at creating here business size based on profitable model, not being just very focused on pricing. So yes, definitely for Grasim, this is very adjacent to its current businesses like putty and white cement, etc. Important to note that Asian Paints, Berger, etc. have taken huge market share in putty against the existing cement players. So it was important for Grasim also to step in here. Of course, paints industry is very exciting from outside. You see 70,000 crore growing in double digits in most years. Paints volume growth and sales growth has been faster than consumer staples companies. And in our view, 30% of the market is in terms of local and unorganized. So that clearly will be up for grabs. How does this pan out? So this is not a 2-month time frame. This will get launched essentially 4-5 months later in Q4, February, March. But we do expect that the smaller paint companies like Kansai, Exo, and to an extent Berger also, they face a more real risk from Grasim. If you see last 20 years, no new paint entrant has created market share beyond 2% because it's a very tough entry barrier. The kind of advertising spend Asian and Berger paints do, 4 to 5% of their revenue goes towards advertising. Distribution-wise, only 1 lakh paint shops are available, and all the paint companies have direct relationship versus the cement companies which have the wholesale route. Plus, in product differentiation and distribution, not too much can be done because existing paint companies are extremely formidable. So in my view, this is more of a impact in terms of multiple. It will take a lot of time for any new player to really ramp up. But for a lot of the home decor companies which have, say, gone into paint in the last 2 years in terms of product diversification, I think this will make life that much tougher. And clearly for the smaller paint companies, clearly multiple could derate. But for Asian Paints, my sense is some derating could happen in near term because Q2 numbers will be a bit weak for paint companies because of very high rainfall and festival demand shifting. But gross and EBITDA margin will be very strong in Q2. We expect 400 to 500 bips gross and EBITDA margin expansion for Asian Paints and Berger Paints YOY in Q2. But volumes will be soft and sales will be soft.
I remember Sherwin-Williams had entered India and they're the leaders in the world paint industry, but they couldn't quite make a dent in the Indian market. And finally, Sherwin-Williams decided to exit. Abanish, afternoon and thanks for joining in. Grasim, a couple of months back, had also launched some sparkle painting services. That was also a pilot project. Could you just give us the correlation between that sparkle news and what they've announced today?
Absolutely. For every paint company, 2 things are there. One is the product which gets sold through the dealers, and then you have the service wherein essentially you say dial up Asian Paints and they'll come and give the full solution. So the earlier thing which you mentioned in terms of sparkle, that was essentially painting service. That was not the painting product. Painting service has already been launched. So it is obviously not through the current brand which has got announced, Birla Opus. That is the product. And they are also importing a lot of the wood finishes. Those they are currently testing, taking customer feedback, seeing how the R&D capability is in terms of product durability, product aesthetics and all that. But that is service part. But going ahead, definitely in Q4, the real product launch will happen. The advertising spends for all companies will go up. Coming back to Sherwin-Williams, yes, they are the globally #1 company and they could not compete against Asian Paints and Berger. In fact, Berger bought them. So yes, this is something which is tough. Just one last example. In consumer businesses, just distribution or manufacturing will not give you the recipe for success. We have seen Hindustan Unilever, which is India's foremost consumer staples company. They tried noodles, for example, and some of the other products, but they couldn't succeed because existing incumbents were there. So this is something which will pan out for the multiples could derate a bit for existing paint companies.
Okay, all right. We'll leave it there, Abneesh. Quick conversation today, but thanks for joining in. Always interesting listening to your thoughts. There are some flashes at the bottom of the screen. This is coming in from the DGCA, saying that they've taken up the matter with Pratt & Whitney on the 1st of September with regards to, the engines, the faulty engines. Pratt & Whitney advised to identify probable cause of HPT blade damage. 11 engines of Indigo fleet impacted, but 6 were a part of the current P&W, that is Pratt & Whitney engines. Only 5 aircrafts were operating engine which were removed before 15. Some details basically coming through, but I think the regulator in that sense for the aviation sector, the DGCA, taking notice and asking Pratt & Whitney to issue a bulletin to kind of how fleet management will happen with them removing engines, and the turnaround, of course, now much longer as compared to what it was earlier. So Indigo is the player, which perhaps the largest player, so in that sense impacted the most as well. 2462 is where Indigo is now trading at. Rupesh Patel is with us. He's Senior Fund Manager Equity Investments at Nippon India Mutual Fund. Rupesh, good to have you with us here. Thank you for your time. The broader markets is where most of the action has been. We had Mihir Vora from Max Life yesterday with us, and he was telling us that the total AUM, industry level in mid and small cap funds is now greater than the AUM in large cap funds. And he was saying, well, he didn't think it's ever happened before. So pretty substantial what we're seeing. Just wanted to get your thoughts on that stat specifically, Rupesh, and then weigh in on the big correction that we saw day before yesterday. And in your opinion, are we back to the market looking up the mid and small cap part?
So first of all, thank you so much, Prashant, for having me on the show. Now, no doubt, today when we look at markets, there is a lot of euphoria considering the fact that we have hit all-time high and all. But if we step back and look a little longer-term picture and look at last 5 years, markets have given, depending on what index we look at, has given 11.5 to 12.5% kind of CAGR returns. This is considering the fact that today, in today's situation, the outlook for earnings growth is far better. Governance standards have improved, corporate balance sheets have deleveraged. So in that sense, I think painting the entire market in some kind of euphoria will not be a right conclusion. As far as relatively smaller cap companies are concerned, no doubt, there are, some pockets of exuberance. Some of these companies, yes, they have potential to grow. They have potential to become much bigger in size as we go ahead in time. But at current valuations, in some instances, we may be discounting too much and leaving very little scope for any kind of disappointment. We are probably not discounting that what happens if the macro changes, what happens when, in today's context, when global growth is slowing down, will their growth prospects remain intact, and the competitive landscape changing. All these factors and many others which you can think of can have impact on their fundamentals and the value which we are ascribing to them today. So yeah, there are certain pockets, but again, as I talked in the context of overall market, I believe that it's not fair to paint the entire mid cap or small cap segment with the same brush. there are opportunities. We have to look at them on bottom-up basis and definitely at current valuations, invest from a longer-term point of view in them.
Hi, afternoon. Have you booked profits in any of the mid and the small cap stocks or themes in your portfolio? Because stocks have run up considerably in a very short span of time. So the risk reward for many, even though the fundamentals are good, may have turned unattractive. So do you want to tell us about some of your recent stocks and themes where you booked profits?
Thanks, Surbhi. Actually, as far as portfolios are concerned, the exercise to constantly evaluate your position, evaluate them on risk-reward opportunities which are available in the market, and what kind of. It's always a constant exercise, and profit booking, I mean, in some names would have happened. So nothing in specific which comes to my mind. But some of the stocks where we believe that a lot has been discounted in terms of their growth opportunity. And as I mentioned, some of the risks we are just ignoring. We have booked some profits there, but that is across market capitalization. Would not be right to put that in a particular category in terms of market capitalization.
Okay, got that, Rupesh. So generally, what is, let's talk about themes, because there are some themes that have been running red hot in this market, whether it's manufacturing or CapEx, PSUs, defense, railways. These themes which have already had a phenomenal ride and rally, are you still willing to back any of them? Or would you not put incremental money in, say, railways, defense, or some of these PSUs?
So we do have exposure to some of these themes where we very clearly see runway for growth, where if we look at their order books, there is visibility as far as the revenue is concerned for next few years. But there are certain pockets where we believe that some of the growth which we are projecting that may not turn out, and we have decided to stay away from those spaces, or where we felt that valuations are probably discounting too much and execution can be a challenge. I mean, those are some of the pockets where we have stayed away from. So it's a mix of everything. I think in terms of opportunities, themes, as I have mentioned earlier also, we believe that financials in this market provides a great opportunity in terms of risk reward. And I mean, though they have underperformed in last 3 to 6 months, but we believe that that lenders within that, the large cap ones, where there is visibility in terms of growth, there are no concerns around their capital adequacy, asset quality, I mean, is no longer an issue for the system as a whole. And valuations in the context where their fundamentals are probably at their best, valuations are very reasonable in the overall context of the market. So I think that is one segment where we still believe there is a lot of value to invest and be there.
Financials, large cap financials. Got that. Thank you very much, Rupesh. Appreciate you joining in, and it's a pleasure having you with us here on CNBC-TV18. Thanks indeed. We'll take a very quick break here. We'll come back. We'll get a check on what's happening in dealing rooms. Nimesh joins in on the other side. We'll get you some short-term trading ideas as well with our experts. Stay with us.
Welcome back. The Midcap Index has moved to the high point of the day. It's a 1.2% rally now. And in the last 10 minutes, it's the banks flying some more. Punjab and Sindh Bank, a 4% up move on that. IOB, a 6% gain on that. Union Bank has rallied close to about 5%. Go down the order, but you would see big moves in many of these banking names, not just the PSU banking, individual stocks. In fact, even other PSU stocks like NHPC also up close to about 8.5% on that. Look at that rally, quite phenomenal. Let's get a sense of what dealing rooms is saying right now this afternoon. It's been a good session, particularly in terms of the broader market recovery. Nimesh is here with an update. Nimesh.
Hi, Rima. So, the markets are of days high, but again, compared to yesterday when there was a basket selling, today the understanding is that there is a large basket buying, largely in the Nifty name. So, well, it's not showing up in the Nifty, but from a flow point of view, that's where the action seems to be. I guess there are a lot of sectors which are buzzing in trade, whether it's the sugar names, some of the oil PSU stocks, and for that matter, even the NBFC names. But the bigger traction seems to be in the PSU basket. Now, within PSU basket, I guess there is a lot of buying traction in the PSU bank stocks. That's been a constant feedback as well for the last many days, that there is buying interest from large institutions in the PSU bank stocks, and that's playing out clearly. Now, the mid-cap index and the small-cap index are up 1% in today's trade. But if you look at the advance decline ratio, that's not showing enough strength to suggest a 1% move in the broader market. So the feedback is maybe some bit of distribution is now started in the broader market. So one needs to be a little careful in the broader markets. But for today's trade, while the Nifty is not moving up, but there is basket buying at a leading FI desk.
All right, got that. So buying happening at the FI desk. That's quite interesting. Let's see what that FI number is like. It's been on the sell side for several sessions. Nimesh, what about stocks? So what's interesting today?
Well, in terms of individual names, the first stock on my list is Restaurant Brands Asia, the franchisee for Burger King. That stock is buzzing off late, but I understand there is going to be a large block deal in this company very soon. Remember, the private equity investor Everstone, they own 41% stake, and they could be potential sellers. So that's something to track going forward. The second stock is UPL. After a long time, some bit of buying traction seems to be back in that stock. So expect high delivery volumes in today's trade. And also there was an antique report today morning. They've upgraded the stock to a buy. And generally the sense is, the second half could be quite strong for companies like UPL. So that's buzzing in trade today. The third stock is Data Pattern. Well, it's up in today's trade, but if you look at this month, the stock is down 11%. There was a fear of a large block coming in Data Pattern very soon. That seems to be not happening now. So it looks like the seller has backed out. So the large block is not going to happen. And hence you're seeing a bit of an uptake in Data Pattern in today's trade. And the last stock is Realty. Again, up 1 or 2% in today's trade on good volumes. The street is expecting some sort of a corporate development in Realty very soon. In Realty, the Burmans own in the personal capacity close to 20%, and there's an expectation that maybe they will further increase the stake. So that's the reason why Realty is buzzing in trade today.
Perhaps an open offer.
Perhaps an open offer. That's right, Prashant. So they own 20%. They can probably go to 26 and do a voluntary open offer as well.
Okay, well, interesting list as always. Nimesh, thanks very much. So that is the list of stocks that you need to watch out for. Mitesh is with us with a quick sense of what to buy or sell today for a reverse trade tomorrow. Mitesh, what's on your list?
A lot of stocks, stock-specific action is happening. So I've taken Ultratech 700. It's made a fresh swing high. The intraday charts are positive, likely to carry momentum. So that's not a BTST, but maybe a 1-2 day kind of a buy. Keep a stop below 86.50. Look for a target of around 8800. And the second stock, on my list is Biocon, which I would recommend to BTST. Keep a stop below 272. Look for targets of 281.
Okay, thank you very much for that. Ambrish Baliga is with us now on the show. Ambrish, every week you give us one stock, one interesting idea that you think would be attractive over the longer term. Do you want to tell us your today's recommendation?
Good afternoon, Rima. My recommendation today is ICICI Lombard General Insurance. I had recommended this about 5 months back with a price target of about 1350, which was anyway achieved last month. So I'm revising the target now. It's a market leader in private sector insurance with a market share of about 9.9%. Clear strategy of profits over market share. So the focus currently is on health insurance, where we saw the retail health agency vertical growing by about 25% in Q1. FY23, the gross direct premium was about 21,000 crores, and in Q1 we saw 6,400 crores of gross direct premium, so which is about 19% growth. which is higher than the industry. Solvency ratio is decently high at about 2.5x, and the company has guided for a combined ratio of 102%. Dividend payout, if you look at it, it's about 29%, which is decently good. So expected EPS for FY25 is 47, so I'm revising my target to 1645.
I remember a couple of weeks back, you had told us about Pidilite.
Right.
Now, Pidilite is also one of the stocks which is making its foray in the paint industry, where you've got a lot of challengers, right? Today, you've got Birla telling us that they want to be the number 2 player. JSW has already thrown its hat. Can you tell us how Pidilite's paint foray has been? What are the channel checks seem to be suggesting? Are they making any impact?
I mean, the way I see the paint industry, I mean, anyone coming in, despite having deep pockets, for them to compete with Asian Paints is going to be quite difficult because Asian Paints by far is the largest. I think the second largest is, I think, 1/4 or 1/5 of Asian Paints. So to even take that place for the newcomers, whether it's Birlas or the JSW or the Pidilite of the world, I think that will take a decent amount of time. And I really don't see the sort of margins which Asian Paints is earning. I don't think any of them will be able to earn that sort of margin because they would be, in fact, be competing with the local or regional brands as compared to the real national brands as such. So I really don't see, this being a value add for Pidilite. It could be a mistake, I would say.
Okay, that's a view on some of the paint stocks. By the way, the markets managed to change the color to green. Nifty looks like, I mean, it's 15 minutes to go, but it looks like it wants to go home positive. Yesterday, we had our first close above 20,000. And if things don't change in the next 15 minutes, then we might have our first close above 20,100 today. Because in that choppy trade, it seems the bulls are having an upper hand once again. Let's pull up the stocks that are looking good or that are seeing some incremental buying. Bajaj Auto is one of them. There's Dr. Reddy's, which is marginally higher. But of course, the big move today has been literally in metals. That's Bajaj Auto looking good in the last couple of minutes. But the big move, of course, is metals and some of these auto names. iSure, M&M, all up between 1 to 2%. Amrish, on autos, I think the stocks were in a bit of a flutter with the comments coming in from the road minister earlier. He again clarified, I mean, he was on the channel exclusive interview with Parikshit today, and he clarified that he has nothing against diesel engines, but in general, as a matter of principle and spirit, I think it's a good idea to go green. That's the point that he made. Nonetheless, what would your sort of thought be? Would you look at putting any fresh money to work in auto stocks? And if yes, which one?
No, see, if you're looking at long-term, clearly I'm bullish on the auto stocks. But after the sort of run-up which we have seen and the level at which the markets are, I think there's a bigger risk of the markets coming down than really going up much more from here. So at this point of time, I'll not really put in fresh money into autos, although I'll hold on to the stocks I'm holding. For example, something like a Maruti or a Ashok Leyland or a Mahindra & Mahindra, I'll possibly hold on than adding fresh.
Okay, all right. Amrish, stay with us. Just coming back for a few more questions. We are up 35 points, so holding pretty nice. We'll come back and talk more markets on the other side. Stay with us.
Welcome back. There's some news on the screen on an income tax survey which is underway at Alcom at the offices in Mumbai. Now, it's been sort of confirmed by our sources, CNBC-TV18 sources. The stock is not doing too much, at least as of now. That is Alcom Laboratories for you. Amrish, another question I had for you was on Interglobe Aviation because of this entire Pratt & Whitney issue that's now hitting this airline as well. And we just had some news updates from the DGCA. I think they are also stepping in and they're talking to Pratt & Whitney because now this is impacting more than one airline. But your thoughts on the stock and whether you like it at all?
I mean, I liked it. I mean, I had earlier also recommended Indigo, I think, at closer to about 1900 levels. And my targets have been achieved. But with this Pratt & Whitney issue, I think it's going to have some sort of an effect on Indigo. So, I mean, moving up more from here, I think would be a bit difficult. Also looking at the way the oil prices are moving up. And closer to $100, I think it will have an effect on the margins for all the aviation companies, including Indigo. So at this point of time, I'll not really buy fresh and would really recommend to book profits to a certain extent.
You know, UBS came out with a note today. They're saying the Pratt & Whitney issue is larger than expected, and they expect Indigo to report a minor loss in the current quarter versus estimates of a PAT break-even. But Ambrish, to stay on, FTSE, the global index provider, has announced changes it has made in its semi-annual index review. BSE Sensex will also be seeing some weight changes. All this will be effective in tomorrow's trading session. Vivek joins in with the key highlights. Vivek.
Well, good afternoon. That's right. So, tomorrow's trading session is when you'll see the adjustments being made. So, FTSE, Sensex, as well as Wisdom Tree ETF, all of these changes will happen in tomorrow's trading session. FTSE is actually a net inflow event for India. Close to $570 million of inflow is what India will witness on the back of the FTSE changes being implemented. The main stock on the radar is HDFC Bank. HDFC Bank will be the beneficiary of three sets of ETF flows. Number one is FTSE link flows. Number two is Sensex. And number three is Wisdom Tree ETF. So on the back of all of that, in tomorrow's trading session, HDFC Bank will see inflows of close to $650 million. All of these estimates are from IIFL. Now, coming to the FTSE All-World Index, the key index to track as far as FTSE indices are concerned is two inclusions, AIA Engineering as well as Syngene, expected to see inflows of close to $30 and $20 million respectively. There are a whole host of other additions that will come into the FTSE All-Cap Index. So RBNL, NMDC Steel, Data Patterns, Ramkrishna Forging, Tamil Nadu Mercantile Bank, Apar Industries, Mazgaon Dock, all of these companies will see inflows in the range of $8 to $12 million. And some of the other inclusions that will see higher tracking tomorrow are KP Global, Safari Industries, Himadri Specialty, Titagar Rail, JBM Auto, Electra Greentech, as well as Kirloskar Oil Engines. There are two stocks that will be deleted from the all-cap index, Brookfield REIT as well as Hudson Agro. Both of these stocks will be deleted from the FTSE all-cap index, seeing outflows of $11 and $8 million respectively.
Vivek, sorry, when are these changes taking place?
The changes are effective on Monday. The adjustments, the actual inflow and outflow will happen in tomorrow's trading session.
They say gains beget gains, right? So some of these that are over $10 million inflows, some of these need no additional help. They've been flying up like rockets, but because they've done what they are, they're eligible to get more. I mean, that's the nature of things. And Vivek, thanks very much. Thanks for getting us that. So we'll kind of touch base once again tomorrow with Vivek on this list. Amrish, just a quick word. We heard Bombay Dying's that news flow, right? They're selling land. My question is not about Bombay Dying. It's about Bombay Burma, the holding company for Britannia, etc. as well. Does this send a signal? And then Bombay Dying is talking about developing additional land, which amounts to 3.5 million square feet of additional area, 15,000 crores over a period of a number of years, etc. For a long time, investors have been complaining that dividends from Britannia, which go to Bombay Burma, have been diverted to fund losses that go first. I mean, does this signal more focus at a group level that maybe they want to do something about some of these issues?
I really don't know because, the amount of funds which are going to come in because of this sale of land, I think will mostly go in to pay off the debt. I don't think the shareholders will really get anything out of it. Because again, we should remember that even for Go First also, they'll have to clear the mess, whatever has been created out there. So I really don't see, a major sort of up move for this stock. I mean, if you're talking Bombay Dyeing, we've already seen that move, but I really don't see much more upside from here because
Bombay Burma?
Bombay Burma, again, being a holding company, we have clearly seen that most of the holding companies, continue to quote at a huge discount, despite, a bull market where it's expected that the holding company discount should come down. Even that's not happened this time. Along with Bombay Burma, you have a host of other holding companies which are still quoting at a huge discount. So I really don't see that thing changing.
Okay, but I think there are some SEBI norms about dividend distribution from a holding company directly to investors, etc. So I don't know if this is the situation which is eligible, which falls under that category. But we'll sort of probe more and get back. But Amrish, thank you very much for joining us. Good speaking with you, and thanks very much for joining us with all of that perspective. Amrish's call today, of course, is an ICICI Lombard, which he's already liked, but he's raised his price target here. Well, 35 points higher is what the Nifty will end with. So there is no kind of big 3 p.m. expiry move in that sense, at least not today. But we've got the Bank Nifty, which will also end, I think, largely flat, about 0.19% higher. And broader markets, mid-cap, small caps, which end with, they're the clear winners. 1.25% in the mid-cap index, and the small cap index was up 1.33%. So very solid gains in that space. Rima.
Well, that's the highlight of the day, right? The mid-cap, small-cap performance. But in terms of sectors, the Nifty Metal Index was up 1.5%. And in that, names like UPL, Tata Steel, outside of the index, NMDC, which also raised prices, SAIL were topping the charts. PSU Banking Index continues to see buying. The Nifty PSU Banking Index up 1.5% for the day. Week to date, it's seen a rally of close to about 6.5%. Other notable movers include in M&M, Eicher Motors. Strength in ONGC continues. This month, ONGC has seen a rally of 8%. On the losing side, Asian Paints is the top loser after Grasim announces a big splash in the paint industries. Coal India, Britannia, HDFC Life, LTI Mindtree are a couple of the other notable losers.
Well, those are some of the bigger cap names. Let's talk about the broader markets because that's where the action was. Look at that advanced decline ratio. Today, it's even better than yesterday because you have over 2,100 advancing stocks and just about 750 declining stocks. That's the extent of the move that we've seen. So which are the key gainers? Well, let's talk about where the price and the volume action really comes together. Central Bank of India, 10.5% up on this stock. Name some more PSUs here. NBCC, NHPC gains between 7 and 8% over here. Throw in names like Union Bank as well. So PSU is really ruling the roost. UCO Bank, Bank of India, even an IRFC came back 3%, but nonetheless some gains on this stock as well. So did Ircon, 2.5%. So even the railway stocks, the correction was just one day. Quite phenomenal. Let's move on. Sugar was a sweet spot. So Bajaj Hindustan, Sri Renuka Sugar, EID Parry, all of these stocks have seen gains between 4-5%, going all the way up to 7 and 8% in some of them. So big day for sugar. Beyond that, we've seen some of the names like a GMR Power, GVK Power, anything that has power and infrastructure associated with it. Big moves on these stocks as well, and volumes as well picking up, worth mentioning. And then you also had the likes of some of the steel names beyond the index. Even SAIL was up in about a 3% up move. Nalco was up about 2%. So the PSU metal stocks did well. Last but not the least, let's just look at the final rates coming in on the stocks that Prashant was just discussing with Amrish. Bombay, Burma, and of course Bombay Dyeing. 9% on Bombay Dyeing. Bombay Burma about 4% higher. Big moves on these stocks as the land monetization plan is well and truly underway. So good moves on mid caps. Big party out there. And yes, indeed, the bell is gone. And we do have our first close above 20,100. So there you have it. 20,000 yesterday, 20,100 today. You know how this market is dealing with momentum.
Okay, on that note, don't go anywhere. Our Thursday special, Big Deal, comes up next.